Hello, financial fans. A bad day on Wall Street, a bad week, a bad year thus far. And today, my portfolio, as of one day's performance, I was down 3.43%, almost 3.5%. And during that same time period, the S&P 500 was down only 1.72, and the Dow Jones Industrials, Dow 30 stocks were down only 1.61%, and the Nasdaq down only 1.79%. So my stocks, my portfolio, was down more than any of the other major indexes. And while that was taking place, something happened here with the indexes versus my portfolio. Year to date, my portfolio, my stocks down 19.57%, so almost 20%. And the S&P 500 SPY, EFT, that's SPY, was down 19.57%. So the S&P 500 and my portfolio are each down 19.57% for the year. And the DIA, the diamonds, the Dow 30 stocks are down 15.71%, so they win the war of the indexes year to date. And the Nasdaq IOO, that's an EFT that tracks the Nasdaq top 100 stocks. IOO is down 18.4%. So none of the indexes nor my own portfolio are having a brilliant year. In fact, quite the opposite. Very much a depressed, downward moving roller coaster that we have been on. And we do have some stocks to mention that are looking good. But in my portfolio, let me take a quick look here, tell you how many stocks have been up and down. I've got about 70 stocks, and there's red ink. Here's the first one is BIG, Big Lots, was up today, and I think there's only one other stock that's up today, TTOO. TTOO is up, and that's less than 1% of my portfolio. Here's one that's up. VEV, that's an electric vehicle stock, is up a little bit. But most of the stocks were down, and Wall Street had a very down day. And I think they're going to run out of room here pretty soon if they keep going down. They've got to start back up eventually, and there's Christmas season coming up, and I'm in the market to stay. And I found some stocks. By the way, I'm not a financial advisor, and any money you put into the stock market you could lose. That is a possibility. But tomorrow, Saturday, what I would probably do is I will celebrate the fact that I'm having a wonderful year as far as life is concerned. I love everything about being me. And the mere fact that the stock market is down, probably more than I've ever seen it down, for as long a period of time, as far down as it has gone, that isn't going to make me lose any sleep. I will be holding on to my stocks, and I intend to hold on to them at least until 2024. That's a chance for a big upward spike. There are times when the stock market moves down, but also I've been around when the stock market has bubbled upward, and it will do so again. I do believe it might take a couple of elections and maybe some scientific discoveries or whatever, but the market will eventually find a more sensible position to be in, and I shall be there hopefully at that time. Right now we'll take a look at some stocks, which if I were to be buying stocks today, I'd be thinking seriously about these stocks. And as I say, I'm not a financial advisor, and any money you put in the stock market can be lost. But let's take a look at some stocks here that are very attractive at their current positions. And we will begin with CVX. And CVX's Chevron Corporation oil stock down 6.5% today, but up a teensy-weensy bit after hours. The 52-week range, the column on the left, 2/3 of the way down, 52-week range, $99.65 was the low, and $182 was the high, $182.40. So it's sitting in there in between the high and the low for the past 52 weeks. And this being oil, it would not surprise me if oil goes up in value before the year ends. This stock is considered to be near fair value and trades about 9 million shares every day. The PE ratio, third item down, middle column, PE ratio under 10, 9.66. And upside down that'd be 9.96, but we don't work upside down, so it's 9.66. PE ratio, that's under 10, that is something I find favorable. Forward dividend and yield, 3 2/3% is what you get for holding on to the stock. The 1-year target estimate for this stock, $182, so the experts who come up with a 1-year prediction think something good is going to be happening to CVX. Next we look at DIA, the diamonds. This is the index which seems to be doing best. Its return year to date is better than the S&P 500 or the NASDAQ or my own portfolio, but it's still down for the year. Keep that in mind. And the DIA has an expense ratio of 0.16%. That's very, very low, which is good. Year-to-date total return, it's down 15.71%, and those numbers actually look good. If you're holding a stock or an ETF, in this case exchange traded fund, you're doing better than the market as a whole if you're only down 15.71%. Next we look at Devon Energy Corporation. DVN is the symbol, and the closing price $57.69, and it was down 8%, 8.6% for the day. The 52-week range, $32.26, and the high for the year, 52-week high, $79.40. So it's comfortably more close to the high than it is to the low. The experts consider this stock to be undervalued, and there are about 12 million people trading this stock every day, or at least 12 million shares traded. It's probably, maybe it's only 12,000 people, but PE ratio 7.31, again under 10, that's good. The forward dividend yield 9.62%, that is very nice. And the 1-year target for this particular issue is $80.35. The last stock we'll look at, Hewlett-Packard, familiar name in high tech. HPE is the symbol. $12.16 was the closing price on this day in Wall Street. And the 52-week range, $11.90, it's near to its low, and the high was $17.76, which is not very much above the low. The average volume, 10.5 million shares trade every day, and this stock is considered near fair value. The PE ratio for HPE, 4.34. Who would have believed that Hewlett-Packard would go down to a PE ratio of 4.34 5 years ago? But that's where it is. And forward dividend and yield, 3.8%, almost 4% is what you get for holding on to the stock. And the 1-year target price, $16.29, $16.29, and that would be a nice move upwards for Hewlett-Packard. I thank you very much for watching.